Retailer Massmart reported a 25% drop in interim earnings. Guy Hayward, Chief Executive of the company, joins us here in studio. Guy, nice to have the opportunity to talk with you. Is this your first set of numbers now after Grant Patterson's left? Yes. And it's not the happiest set of numbers, 25% headline earnings down, and you've got a lot of issues that you're having to deal with.
Yes, thank you. I think I'd like to draw your attention to operating profit, though, which is before sort of the funnies in the income statement, and they were down. That was down 3%.
3.8.
3.8, correct.
Okay, make it 4. Add inflation.
I'll take 4.
Add inflation of another 6, 7. No. So you're talking. It hasn't been a great 6 months, but you guys are coming. It's almost like you've come into Walmart has come into a sector where it might have found, and that's the question really, is the going tougher, or are the competitors just more difficult?
No, the going's got tougher. So we've come through an extraordinary decade where everyone did well almost despite their business models. What you're seeing play out now is really an upper income group that's doing fine, and if you're selling to that group you're doing well, and then a very tough middle and lower income level consumer where people selling into that business are doing very, very badly. So the competition has got intense for one, but also there aren't enough sales to go around, and so it's very, very hard trading.
But you guys are doing, and I judge this by my wife, who now shops at Game for her food.
Yes.
Because she says the prices between her old Woolworths that she went to and Game are dramatically different.
Yes.
I don't do the shopping for the food, but if I know her, and she pays great attention to this thing. Why aren't you seeing more people as or more of a shift towards your model? Because it does seem to be one that Walmart one of low prices, high volumes.
Yes. Well, in the numbers are some great answers around your questions. So the food participation in Game is about 20%. So 1 in 5 things sold is food, and then the growth of food in Game in the comparable stores is 20%. So your wife's having a big impact in the business.
I'm not so sure. Well, I hope not anyway. But the reality is, if if that's your strategy, that's high volumes, low costs, or lower margins.
Yes.
How long does it take for people to wake up to that reality? I'm talking about consumers.
Well, the consumers are very savvy because they get a certain amount of money in cash every month, and they have to plan for how to spend that for the next 30 days. They're very savvy as to where the best prices are, and they'll know buy retailer, probably buy physical store where those best deals are. And what we try and do is be consistently low price, so people come to us easily without having to plan their shop.
So that happens quickly enough.
We hope so.
Your problem, though, is that you're having litigation.
Yes.
Against you say in your results 3 retailers. Which 3 are they?
I'd rather not go into detail, but
which 3 are they?
The publicly
it's clear. Is it ShopRite, Woolworths, and Pick n Pay?
ShopRite and Pick n Pay are the publicly known litigation, and it's one site each: Cape Gate in the Cape, and Midlands Mall in Pietermaritzburg.
And what's the story there?
The story is quite a long story, but I'll keep it very brief. So many years ago, what was sort of standard fare for the landlords and the food retailers was to enter into what was called a lease exclusivity deal, that only 1 or 2 food retailers would be allowed to trade in those shopping malls. And that went on for a long time. You'll recall the Competition Commission looked at this a few years ago, and they said, look, it doesn't look right, but we can't find evidence that there's a problem. We then rolled out food in Game. So Game would have been in that same shopping centre but not selling food. Now we start selling food, and we begin breaching the undertaking between the landlord and the dominant food retailer. And so the food retailer is saying to the landlord, you need to uphold my exclusivity and you need to tell Game to stop selling food. So it's a sort of a 3-way thing.
Sounds rather anti-competitive to me.
Well, we agree, and intuitively it can't be right. It can't be right that reducing customer choice and entrenching a dominant food retailer's position is the right thing. That can't be right.
But I'll go back to a seminar that David Shapiro and I attended in Omaha this year, where Pat Dorsey, ex-head of research at Morningstar, from the whole world, he picked South African retailers as being the highest return on equity anywhere. And he said, there's a sweet spot for you to get invested in. And I guess the question I have is Massmart / Walmart going to change that?
Yeah, look, I think the high returns are not because of this kind of behavior. The high returns are because of very high market shares. And that's probably a consequence of the sanctions era where there was no inbound investment. So the high returns are just very well-run businesses with very high market shares.
All right, so you coming in, you're competing, it's not going to be easy. Those returns are going to stay for the likes of Woolies, ShopRite and Pick n Pay.
I think all returns will normalize at some point. I mean, they have been very high, they're probably in the 40s in some cases. But I think because of the market shares and how well run the businesses are, they will be higher than probably most international ROEs.
When you start looking ahead to, we've spoken about food, but for the rest of the business, headline earnings down by a quarter. Are you expecting in the second half of the year that you can recoup that?
Gosh, that's a tough question to answer. I mean, the environment is very volatile. Lots of stuff going on. And a 5-month mining strike was something we had to deal with in the last few months. The metal workers strike has meant we are now behind schedule on new stores that were being built and fitted for the rest of the, for the remainder of this financial year. Maybe more of the same. 10% sales growth, 7% comparable sales growth, probably risks equally to the upside and downside.
That comment that you made in your results today about perhaps we haven't fully appreciated the impact of the 5 months miners' strike. What happened to your stores inside those affected areas?
They went backwards heavily on sales.
But how? Yeah, give us some quantity.
50% in some cases.
50%?
50%, 50, yeah. So we, for example, Rustenburg, we've got Dion Wide, we've got 2 games, we've got a builder's warehouse, we've got a wholesale store, and we took a sample of Polokwane, Rustenburg, Velkom and Clarkstor, and they were way below the average sales growth in the business, and 50% is about the number.
50 is that's an enormous impact.
Mm.
But the comment that you make is quite aggressive to say that maybe we don't fully understand the impact of this on the economy. Maybe unpack that?
Yes, not meant to be aggressive, it's sort of wondering out loud that the second round effect, the people who are supplying the mines who haven't operated for 5 months, the people that they employ, there's a second round effect that maybe we're underestimating. Maybe, for example, the remittances back into the Eastern Cape, they must be down. And so I was just wondering out loud whether we are underestimating the immediate effect, and then maybe for the next few months a sort of a ricochet and echo effect into the economy.
Outside of game, mind you, that's another point. You say, and interesting wording, you say that of all the groups you focus on value, innovation and controlling costs, and everything, or the other parts of the empire did well excepting for game. So where did game fall down? I hope it's on controlling costs.
No, in fact they did a great job on controlling costs. Game South Africa is the core of mass discounters. There's also Game Africa and Dion Wide inside there, but Game is the core of the business, Game South Africa. Its sales were flat, so its sales growth was 0.4%. So if your sales are flat and you hold your gross margin but your expenses climb, your profits are going to decline. We had a second thing hit us, which was our gross margins came down because of the competition out there. It got very competitive as people scrambled for market share. So we had flat sales, lower gross margin, higher expenses, and the result is profits down 70%.
You're quite specific. You said value, innovation, or controlling costs.
Yes.
So did they not offer value?
Well,
did they not innovate, or did they not control costs? That's the question.
We believe that 0% sales growth is higher than the market in those categories. We're selling durable product to middle-income consumers. We think 0 was a good answer.
Why not just rebrand them to Walmart?
We've thought about that. We believe that if you're going to change your retail branding, you do need to change the inside of the store as well. It must be a different store when the doors open on the Monday with something across the top, something new. And it's hard to know what that new format would be, because it's any format that can be opened in South Africa is open at the moment.
But the Walmart format?
Well, I'm talking about what's inside the store as opposed to the name across the front. I mean, Walmart supercenters are bigger versions of Game with food in. They would have pharmacy as well, for example, probably some clothing, but broadly speaking, it's that narrow food offering and a much wider general merchandise offering.
How much how much interest is Walmart taking in Massmart here? Do you see the CEOs and the top guys from that company?
Yes, yeah, they're very supportive shareholders and very active managers as well. In fact, my immediate Walmart boss, Shelley Border, who runs the EMEA region, is in country today, and she was at the presentation this morning, and she's flying back tonight. And she was in the stores with the 5 guys who run the businesses separately. So very active interest, very supportive.
But what do they think of these numbers? Down 25%?
Well, they're obviously disappointed, much like we are, but because they span the world, they see this elsewhere. So they're in South America. They're seeing the same upper lower income thing play out. They also sell, they're in America of course, and they're selling durables to middle income America, which is also tough going, and they report comps of 0 and -%. So they've seen this, and they have sort of good advice on what to do about it. Just switch to value, make sure you're relevant, be aggressive on pricing, keep your costs down. Very supportive.
And the share price has been, well, it's only 13% down year on year, but if you go back to where you were last May, 200 Rand a share, now 134 Rand, there will be some shareholders saying, should I dump? Or other shareholders saying, is it starting to offer value now?
Well, you'll have to ask them, but certainly I think you sell at the top and buy at the bottom would be my guess.
Kai Hayward, look forward to talking to you again in 6 months' time. It was his debut set of numbers, and pretty nice to have his boss. I hope she's watching you, Kai, out from the United States. Walmart, the great international low-cost, high-volume retailer. Interesting to see its operations in South Africa that really are at the moment struggling, but we're keeping an eye on that, and I'm sure the competitors are too.